Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this technical analysis of the stock market video, we're going to take a look at the S&P 500 ETF, the SPY, look at the VIX on a longer-term perspective, the semiconductors, the financials, and three stocks, 3D Systems, Gilead, and Whole Foods Market. So stay tuned. All right, let's start off here with the SPY. The SPY continues to trend higher. It was up 91 cents on Friday. I think we may have a little bit more to go, but we're getting very, very close to completing the third minor wave up. And then we'll have a fourth corrective wave and then another fifth wave up, and that should be it. We look at it on the weekly chart. Here's a little bit clearer. You can see the steep channel that we're in. We continue to ride above the 10-week moving average, and we're up $2.17 for the week, but we're getting close to the top of this channel too, and like I talked about, very close to the end of this third wave, and then we'll get a fourth corrective wave that we'll have to watch and see how that develops. Now, the first one down here, wave 2, was a flat, so I'm expecting this one to be more of a zigzag, kind of the opposite. All right, let's take a look at the VIX. The VIX continues to be in the cellar. You can see we've had 3 weeks in a row where it closed below 11. Last time it did that was back here in June, July 2014, when there was a lot of bullish extreme sentiment going on. So this is the only other time in the last 8 years that this has happened. So there's a lot of complacency, there's no fear, and that's not surprising given where we're at, very near the top of the market. Okay. Now, the other thing I want to mention is that a couple of Investors Intelligence Advisory survey readings that came out. Now, the week before last, the reading that came out was the highest percentage of bulls since the top in 2007. Then this last week, the reading came out, and it was the highest percentage of bulls since January 1987, prior, just months before the 87 crash. So we're talking about 30 years ago. Okay, so there is a high degree of bullish sentiment going on right now. And so, we have to keep that in perspective along with everything that we're seeing in the charts. Okay, semiconductors. Semiconductors have been pushing higher here also. Taking an escalator to the sky, and right now you can see we've been talking about this divergence that's showing up. Super strong, move here, usually an indication that that's the middle of the move, kind of very, very strong. This high reading, and it continues up, and then you start to show the divergence showing in here. So we had this reversal candle right here. Never got it closed below it though, so price never confirmed it wanted to break down, and it continued pushing higher. The last 2 weeks have not done a whole heck of a lot, just a couple little candles in here. So watching to see if this continues to push or does it start to roll over. I mean, we've only changed like a total of like 50 cents, down 51 cents in the last 2 weeks. All right, so that's the semiconductors. The financials have also been going not also, the semiconductors were going straight up. The financials have been going sideways since mid-December. So literally, the high here at 23.87, the high this last week, 23.86. So, the way this looks like it was going to want to break out to the upside. Now, we'll see if the market continues to push up like that. And the financials continue to push to the upside. Right now, we're not seeing divergence. We have this really strong reading again right here, which would indicate to me that this is a third wave of some kind, probably like the minute wave or the minor wave up. Now, I don't have an Elliott wave count on this right now. I haven't spent time doing that. But the strong reading right now is just a reaffirmation of the strong momentum that was in this. It's consolidated. It looks like it wants to then go higher. So that's what I'd be watching for on the financials. So let's take a look at 3D Systems. Their earnings come out on February 28th. So really, really interesting with these guys. What I'm seeing right here on a weekly chart is a whole lot of compression and sideways consolidation. This looks like a symmetrical triangle sideways. And after this big move straight up here, to me, what I'd be looking for is a second leg higher coming out of this. And we may start to get this as we break above, multi-week highs in here. I didn't spend time on the daily chart. This is what caught my eye on the weekly chart. You see we've had one heck of a correction after this huge move from a intra-week low of $1.25 in March 2009 all the way up here to like 97 in January 2014. This is when a lot of retail stocks were peaking out too, and then consolidation. Now these guys have done a heck of a lot of acquisitions. They could be doing, this is digesting all of that, and now it looks like they're trying to make another move to the upside. Now the question is going to be, is this a counter trendish A, B, C? That would be my guess, but it still tells you that there's probably one more move coming up to the upside. So that's 3D Systems. Gilead Sciences, here's what happened with earnings this week. Very disappointing. Investors didn't like it, broke on down. Pretty dramatic move to the downside. And I guess the biggest takeaway I've got on these guys is just looking at it from a weekly chart. It just looks, pretty negative. It's just trending down very solidly. Not seeing divergence coming in, at least not really yet. The jury's out on this one. You got to see if it continues to move to the downside is what I would be expecting. Now, there may be some support that comes in not too far below this, actually. The first level of support. The low is 65.38 for this last week. And if you look over here, probably in the 63 to 64 area, let me zoom in just out a little bit. That would be my guess that we're going to get, right in this 63 to 65 area, get a little more support that comes in. We'll see if that happens this coming week. And then you just look for stair-step support on down if it continues to trend down. So right now, kind of in that downtrend on Gilead. And the last one here is Whole Food Sciences. Whole Food Market, not Sciences, Whole Food Market. And you can see over the last year, all this has been doing is just bouncing between 28 and 35. It's just fluctuating, trying to get its feet underneath it as as the company's trying to figure out what to do in this marketplace. And when I look at this, and this looks, like we've had a big move, sharp pullback, another third move down, and then a sideways consolidation, makes me think that there's going to be one more move down. And it's very interesting that we've got a gap that's wide open here in the low 20s, a big gap that was formed back in 2010. And if we get a substantial close now, it has closed below 28 a couple little times in here, but I would say, maybe a couple of them, and it breaks this 28 with some continuation, it's probably going to be heading down to that, closing that gap in the low 20s. That would be my guess. So we'll continue to watch Whole Foods. All right, that's it for today. If you found like this video was helpful, hit the like button and subscribe to this YouTube channel so you get notifications when I do post. And can you think of one person who would benefit from this video? Share the video with them. If you're not watching this on my website, head on over to the website and check out the other posts I've got for you. I do have a post I'm putting out today related to trading psychology. You might want to take a look at that. And I've got a couple other things I posted this week on Tesla, and of course Under Armour was last week. And get my free ebook, Help You Stay in the Game Trading Options. If you're trading options, take a look at that. Click the image on the screen. It's a free download. So until next time, stay focused, follow your plan, trade without fear. Have a great day.